Welcome to this week's Weekly Forex Forecast for the week ending December 20th, 2024. Today we are talking about the DXY, the Euro, the Pound, the Dollar CAD, and also the Dollar Franc. Now guys, sorry for being out for a few weeks. I was on vacation for the first week, as I mentioned to you guys. Then I got sick for a week, and then our son, our 19-month-old, was in the hospital for almost a week. So he was on oxygen for a while, for about 5 days with RSV. It was a terrible time for us, but he is fully recovered. And so, again, I apologize for being out, but, family first, right? So looking here at the DXY, guys, let's go ahead and jump right into this. And I will be doing, daily videos and daily blog posts again going forward, okay? So looking at the DXY, the US dollar index here on the weekly time frame, this is really what we've talked about here for the past few weeks. You can see that, first of all, this back here was the reclaim that I talked about at length when it was occurring. So you can see that back here, we got the move below the bottom of this channel here. We got the reclaim back here at 102.60. This is where I was flipping bullish, and my targets were 104.50 along with the top of this trend line up here. Now, so we've since seen a breakout above this. And while I was away, or right around that time, if you'll notice here on the daily time frame, what you'll notice is that we did have the DXY breakout from this trend line here. And notice this low right here, right off of that trend line. So perfect retest through there. Now we've seen a nice rally since then. However, this area between 107 and 108 is once again serving as resistance here for the US dollar. So it's a little bit difficult to see here on the daily, but if you look back here, the reason I have this level on here is this was the resistance back here in 2023. So you can see that we had this high back here and also this one coming in right there around 107.1. And that is what is capping the DXY so far this week. So we have FOMC coming up tomorrow, guys, and that's obviously going to be a significant event here for the DXY. So time to be careful with these markets. This is not a time to be actively trading with the DXY just going sideways here below resistance and FOMC coming up. This could go either way. We could get the break back above this level, potentially above 108, or we could get the pullback down here into lower wicks like this down here. What it's going to come down to is where the market closes on Wednesday in relation to this current range that is set up. All right. So again, right now, I'm not looking to actively trade these markets with FOMC coming up. But I would say, though, if you look back here, what I would say about the DXY right now is if we were to see Wednesday and technically Thursday holding below levels like this here, then I would say we're looking at, a potential pullback from the DXY. So if it gets below here, holds below this on a daily closing basis, then we are probably going to get that pullback. And my target for that would be this lower wick right back here. If we get it. Now, if the DXY can close above 107.1, up here in this area, then we are probably going to get a move back here toward this upper wick. So my target would then be up here in this area. Right? So again, it's going to come down to where this market closes in relation to the current range support and range resistance up here. But longer term, though, like I've said, I do think that we are going to see, or likely to see, the DXY head up here toward 109 to 110. So regardless of what we get here over the coming days and even weeks, I do think that this area up here is going to be a magnet for this market. This candle back here, notice a very shallow retrace through here. We have not seen a move into this 109 to 110 area, which, by the way, this is also close to the top of this channel. So we saw the reclaim back here. A lot of times when you do get a reclaim like this, you see the market move to the other end of the pattern. So that would be right here around 109 to 110, which is also this weekly imbalance from back here in 2022. All right. So no guarantees, of course. This could take a while to play out. It could take months to play out. But I do think longer term, we are going to see the DXY head up here in this area. So I continue to like looking for buys on the DXY as long as it holds above that 2023 trend line. So next up, we have the EURUSD, which hit my end of year target right around 1.035. This was the target that I gave following the breakdown from this trend line back here. So once we got the breakdown below this trend line here, my target for the euro flipped to 1.035. So you'll remember that following the breakdown from this range right here, my target was this area, right, this low. And once we got the breakdown below here, my target was 1.035. Now, the reason for that is if we go out to the weekly time frame, and I talked about this weeks ago, but just to kind of recap in case you missed that, the reason for the 1.035 target was the fact that we had this low right back here, we had this one, we had the EURUSD breaking down back here in 2022, And you can see where this became a pivot here for the euro during that breakdown. Now, the market, okay, once the euro broke back above here, over here in this area, then we never got a retest of 1.035. Instead, we got 1.045. So anytime you see this kind of price action right here, where you get the reclaim, back through here, and then you get a rounded retest down here toward this level, rounded retest here again, you've got these equal lows that build up through here, and you've got 1.035 left untouched. There is likely to be a lot of liquidity down here in this area, and sure enough, that's what the market targeted. Okay, so for the euro now, guys, what I'm looking for here going into FOMC is the range between 1.045 and 106.15. Now, if you guys saw the recent commentary that I put out before I was sick and then my son was sick, this was the idea back here. So when the euro was coming off of this area right back here, what I mentioned is that we had these lower highs that had built up. And this right here, okay, your range highs up here in this area, there was likely to be liquidity above these. So what I was talking about in that video was to potentially look for a selling opportunity up here in this area on a sweep of these highs for a move back here toward the range lows around 1.045, which is exactly what we got. Okay, so nice little move there from the euro if you were able to catch that. Now, going forward, though, I think it becomes a little bit trickier only because right now the market is holding above 1.045. Okay, so you still have this range intact here for the euro. And you also have this lower wick down here that is so far untouched, okay? And a lot of times when you do see a market that does this right here, where you get a strong bounce above a key level like 1.045 and no backfill here in this area, a lot of times when you see this area down here becomes a magnet, okay? So what we could see here from the euro is if it can get below 1.045 on a daily closing basis, again, remember, we do have FOMC coming up, guys, so be really careful with these markets. But if we see it get below here on a daily closing basis, then we are probably looking at another run down here toward 1.035 to fill in this lower wick down here, okay? Now, if the market can, find support down here on Wednesday and bounce from here and start taking out some of these highs, then this up here becomes your target, right? 1.0615. So really, again, just a range-bound market here for the euro. It's not my ideal market for trading just because I'm not necessarily a range trader. I like looking for fake outs within a range, so if we were to get a move down here toward this area, then a close back above, something like that could be appealing. Same thing if we get a move up here toward this area and a close above here and then a close back below. Something like that could also be appealing for a short, right? So I think that you've got to look at the extremes here for the euro if you're trading this market. In other words, you don't want to trade this through here. This right here is a no-go. You want to be looking for, longs down here if it sets up, and you want to be looking for shorts up here. Just keep in mind, though, that, as I said, you've got this lower wick down here that could serve as a magnet over the coming days for the euro. So just keep that in mind if you are trying to buy at 1.045, that we do have this lower wick down here that is so far left untested. All right, so next up we have the pound, which if you'll remember back here, what I was talking about following this weekly close back here. So what I talked about, for weeks now, really months, is the fact that back here in April, you had the market on the weekly time frame putting in this stair-step rally. Now, every time the market never closed below the previous weekly closing price, except for back here, right? We had this closing price right here. Then this candle is what broke the structure, okay? At this point, guys, I was looking for shorts. And what you'll notice here is that following this weekly close, and this is what we talked about, this area became resistance. We then had a range build up here for the pound, and I like shorts against 130.50. So that played out relatively well. We then had the market come down here into this long-term trend line, okay? So this is the weekly time frame, obviously a slow-moving market when you're looking at a weekly, but we have a range here for the pound and a potential higher low developing, okay? Now, one thing for the pound that I would like to see is if you're looking for shorts, okay, I think that you've got to be careful trying to short anything below up here around 1.285. And the reason for that is you can see that back here on the weekly, you can see that we had this closing price and this high through here. Now, it became very choppy through this area, but you can see that this was the range low from back here, right? This was the range that built up. Now, this recent high did not test that level, okay? So you have potential liquidity that's built up above that 1.28 high. So what I would be looking for here from the pound, if we see dollar weakness going into FOMC, then I would be looking for a move back here to test these range lows, sweep this high up here, and then you're looking for a failed move below this level, okay? If we're going to move above this to sweep it, retest the range lows back here, that would be step one. Step two would be look for a failure below this high back here, okay? Or really these highs. If we get that, then we're probably looking at a move back here toward the lows, okay? So right now though, like I mentioned with the euro, I don't think that you want to be trading in this area, okay? Everything through here, in my opinion, is really a no-go. I mean, it's just way too choppy, especially with FOMC coming up. So I'm looking for areas like this up here to potentially get swept before rotation lower. The same thing down here in this area if we were to get it, right? So looking at the extremes here for the pound within this range, I think is kind of the way to go here for this market, given the fact that it is just range bound. Next is the dollar CAD, guys, which so far has played out really nicely for us. If you'll remember in previous videos, I talked about this one a lot recently, but you can see that going back here to 2015, this pair has been moving within this massive channel. Now, the fact that the market was coming off of this low down here, also carving higher highs and higher lows, despite the fact that it has been very choppy here over the past few years, this right here, okay, once we get the break above 1.387 on the weekly, this is where, guys, I was talking about, potentially looking for buys toward 1.4265. And what you'll notice here is that this is a 2-year range for the dollar CAD. We even got this nice little rounded bottom throughout this period, right? So you can see that this close, I mean, really, ideally, this one back here, the fact that this week held above it, I was telling VIP members that I was looking for longs through here. My first target was 1.4265. And the reason 1.4265 was my target here, or at least my first target, is the fact that we have this range from back here. So if we go to the daily time frame and go all the way back here to the price action through here in 2020, what you'll notice is that this was the range low. Okay, so this area back here, you've got the range lows that built up through here, and this became resistance. And now you've got the range highs up here around 1.4265. Now, so far, the dollar CAD is breaking above that. Okay, so if we zoom out, what you'll notice here is that this range, the lower portion of this range became the recent resistance. Okay, the range lows back here became the range highs, and the range highs back here, okay, became this recent resistance. Now, so far, the dollar CAD is breaking above that. All right, so what I would say here is if we look at the, let's say, 4-hour time frame, you can see where this level did serve up as resistance. In fact, it held during yesterday's session before we've seen a nice little breakout here above this. So if this holds up, okay, and the dollar CAD can close a week above this level, then there is not much stopping it for a run all the way up here toward about 1.465. Now, that might sound extreme, okay, but you've got to keep in mind that this was a 2-year range that built up for the dollar CAD. And the longer a market coils like this, the more aggressive the resulting breakout is likely to be, okay? And what I've said in recent videos too is that expect, once we got this right here, to expect a very aggressive, very explosive move higher here from the dollar CAD. And so far, that's what we're seeing. So you can also see that, I mean, this pair can move incredibly fast once it gets going. It does tend to be very choppy like this back here, right? However, once you get these breakouts, I mean, look at this back here, look at this back here. I mean, there's tons of these moves back here that once this pair gets going, it can move incredibly quickly. So again, I think if it closes above 1.4265, guys, on the higher time frames, then we are looking at a move up here toward the range highs. All right. So nice little move, from current levels if we get it. Alternatively, if it were to close below 1.4265, then that level would be resistance here for this market, and we could get a pullback. But bottom line, guys, with this market breaking out of that 2-year range, like I've said over the past few weeks, I do like the idea of looking for buys on pullbacks here for the dollar CAD for an eventual move up there toward 1.465. All right, so last up, guys, I want to talk about the dollar franc. I'm not going to spend too much time here because, to be honest with you, this isn't, what I would consider an A+ setup. However, there's kind of a lack of decent price action right now in the Forex market, especially this week with FOMC coming up. But with the dollar franc, what I'm looking at here is the potential for a trend line breakout if this area down here holds. So we'll talk about that in a second. But you can see here on the weekly, this is coming off of the closing price from back here. We've got this high and also this one through here, which you can see that so far we are seeing a slight breakout from this. Now, with FOMC coming up, guys, I am not going to sit here and say that this is a confirmed breakout, because right now, I mean, this could go either way. This could confirm the breakout and hold above here, or even close above areas like this back here, right? Or we could get the close right back below here. It's going to take, between Wednesday and Thursday, really, for this market to decide which way it wants to go. And personally, guys, I'm in no hurry to buy this or really do anything here, just because I think if we were to get the confirmation that this is broken, right, you can see that the dollar franc has really just been in this big range here, this massive range going all the way back here to 2023. So this is your range that you're dealing with. And right now, the kind of tricky part here with this pair is that it's trading right here in the middle of this range, right? So even if you get the confirmed breakout above this, you've got to be careful buying, because you've got this weekly pivot back here, right around 90 or so, 0.9. And then you've also got this area around 0.915. All right, so this is the range highs up here in this area. But if you're looking for something short term, right, what I would say is if we can get a weekly close above this pivot right back here, okay, so notice how we have these lows back here. We've got the highs or closing prices through here. If we can get a weekly close above here, then it puts the market back within this range, in which case we are looking at a move up here toward 0.915. However, the key here is that we need to see a weekly close above this area. All right, now that's scenario one. Of course, if we were to see this week close back below here, okay, back down here in this area, then we could be looking at a run back here toward the lows around 87.30 or so. All right, so again, not, what I would consider an A+ setup, but I did want to mention it just because it is kind of interesting here with this weekly trend line and also the range that's built up here ever since 2023, okay? So again, guys, just be careful with FOMC coming up with all of these markets. I think the best approach right now is to stand aside, let the market figure itself out, see what we get between Wednesday and Thursday, and go from there. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Click on the link in the description of this video to save 90% on lifetime access. Or if you're on the website, click on that join VIP link. I will see you on the inside. Trade well out there, and I will talk to you again tomorrow.